Hello everyone, today we are going to be talking about the finances of my recent home purchase. If you all have not heard, recently the feds have lowered interest rates, are in the process of lowering interest rates, where it's predicted that in September they will lower interest rates. And mortgage interest rates have had a 15-month low, which means that it's going to be more affordable for you to purchase a home, and you can likely purchase more home than you would have when those interest rates were higher. Now, we just recently closed on our home in early June, and when we did that, we were in this climate of about 7% of an interest rate, and that makes things a lot more expensive. So today I want to walk you all through some of the numbers that you might have to pay when you are purchasing your home. Now, we all want to purchase a home. It's like the American dream to purchase a home. However, sometimes when you're purchasing a home, it can appear to be more economical than renting because there's this myth or this feeling that we are wasting money by renting, that we're just throwing money away each and every month. However, when you purchase a home, there are a lot of not necessarily hidden costs, but costs that you do not anticipate. So I'm going to take you through the exact numbers of what we paid to purchase our $1.6 million home here in Boston. You may think that this is a mansion, but real estate in Boston is very, very expensive. So for 1.6 of a purchase price, we got about 2,600 square feet. And that is about the average for the size of a home in the United States. All right, so I have some numbers here. So you'll see me referring to my computer every now and again, because I want to make sure that I give you the actual numbers. And you see this piece of hair right here, it's like not allowing me to be great. Okay, let's get started. You know, a lot of people think about a home purchase and they consider the down payment as the largest expense, in which it is the largest expense, but there are additional expenses that you have to plan for when you are thinking about purchasing a home. And the first stage of this home purchasing process is really kind of this pre-approval stage. Oftentimes, depending on what type of real estate market you are in, you would likely want to have a pre-approval letter from your bank before you even start to look at homes. Some home housing markets can be so competitive that if you do not make an offer at the time of your viewing, you might miss an opportunity of a good deal or to get into your dream home. And we know that this process can be so emotionally charged, so you want to make sure that you have that pre-approval letter before you even go to view homes. With that, there also might be a pre-approval fee. In our case, when we purchased our home recently and when we purchased our past home, our past home we're kind of already living in, so that's a whole different process. But when we purchased our home recently, there was no pre-approval fee that was charged. However, after we got the pre-approval, they had to run a credit check to get our credit report to make sure that we were a responsible borrower and there was nothing that would raise a red flag to qualify us for this loan. So you have to pay that credit report fee, and that is going to be ubiquitous. And the average range of a credit report fee is like $25 to $100, and what we paid was $119.25 for our credit report fee. So $119.25 coming in right now. Now, after you go through this pre-approval phase, the next phase is the house hunting and making an offer. House hunting and making an offer phase. So in this phase, it includes the offer letter that you will present to the seller of the home that you actually want to purchase this home. The offer letter is typically drafted up by your real estate agent. And with that, we had to put down $1,000 in order to confirm the offer. So we paid our real estate agent $1,000 for the offer letter. Now, after you have an offer letter and that says, okay, you want to purchase a home at this purchase price, there might be some back and forth of agreement from the seller of what is the actual purchase price. After you all have solidified a offer and the amount that you would pay for the purchase of that home, next you have to get an inspection. I know that some markets, like in 2020, when interest rates were at an all-time low and people were waiving inspections because there was so much competition that they were often going $100,000 over asking or more, or all cash offers. So if you are in an environment where you have time, where it's not as competitive, then you definitely don't want to waive your inspection. An inspection can help you to understand what some of the future projected expenses might be for this home and help you to understand a little bit more about our home. When we purchased a home, I was right there step by step with the inspector, and he helped me to understand where some of the switches are and how do I turn off the water to the washing machine if there's ever a leak, where is the utilities closet, things of of that nature. So for a home inspection, it typically costs about $300 to $500. You know, we're in Boston, Massachusetts, where things are a little bit more expensive. This is the price that we pay. So we paid $850 for our home inspection fee, which is a little bit more than typical. Then after you have your inspection, you also have to get an appraisal of the home. The appraisal of the home will be required by the bank in order to ensure the amount that you want to purchase that home for is equal to the value. If not, then the bank may only say, for example, that the home appraised at $100,000 lower, or I don't know, $500,000 lower than the home that you want to purchase. You may have to pay that additional amount, and the bank may only give you a loan up to the amount of the appraisal value of the home. So it's either your offer or the appraisal value, whichever is lower. But when you do this appraisal, it is not something that you can waive. The bank will actually send out their own appraiser to the home to evaluate the value of the home. And that appraisal fee typically is about $300 to $600. In our case, we paid about $695 for the appraisal. Now, once you've gotten your offer letter, which we paid $1,000 for, you get the inspection, which we paid about $850, and then you have your appraisal, and the bank says, okay, now this is a good home to purchase. We will lend you, well, may lend you the money. You still have to submit your application and finalize the application. Then you have to submit a purchase sales agreement. But before you get to that point of a purchase and sales agreement, you have to get a real estate attorney involved. Oftentimes, this real estate attorney can be offered and someone that the bank typically uses, or you can get an independent real estate attorney. We used a real estate attorney to purchase our past property, which we were living in before we purchased it from the landlord, and so we just used that real estate attorney. Real estate attorneys can be anywhere between $500 to about $1,500, and in our case, we paid $1,300 to our real estate attorney. Now, our real estate attorney helped to review our condo association documents, the purchase and sales agreement, and to negotiate on our behalf, as well as submit all of the other documents to the town in which you live to get the deed and all of the other necessary documents to secure your home purchase. And in this case, they were representing us and also the bank. So we paid $1,300 to our real estate attorney, and then they draft up the purchase and sales agreement. At the time of submission of the purchase and sales agreement, that's when you have to put your down payment. And for us, we put down $79,000 of a down payment. Now, after all of that, there's likely a little bit of a waiting period. And during this waiting period, you basically just chilling out and saving up your coins because at the time of closing, you will have not only your closing costs, which are the costs that the bank charges you for the loan, and you will also have the remaining down payment. Typically with your purchase and sales agreement, you have to put half of the down payment down, and then you'll have your closing costs. I just went to find our closing documents. And when you're purchasing a home, you'll notice that the bank will send you these closing disclosure documents in the mail, sometimes multiple copies. This is why I still have them. And it is really important that you review all of this information to make sure that the conversations that you've had with your lender actually have been documented appropriately. The first version of our closing disclosures for this home that we purchased actually had private mortgage insurance, or points that we had to pay for the loan, but because we used the physician's loan, then that fee is often waived. I had to email them, have them update the closing disclosures, and send another copy. Now, it's gonna have some information at the top, but let's just jump into the numbers. The first number that you'll see on your closing disclosures is your loan amount. This is the amount that you're gonna be borrowing from the bank, and your interest rate, the interest rate that you locked in at. These numbers are very important, but not the only numbers, and oftentimes these are the numbers that people most often think about. But there are other numbers included in this that are more important, especially before you actually get to this point, so that when you're negotiating between the two banks, you got some information of how much they're gonna charge you for the loan. Because honestly, the interest rates are gonna fluctuate a bit, negotiable. The amount of the loan is likely going to be the same between the banks, so you want to know how much they're going to be charging you for each thing. It has all of the information about your monthly payments, your projected payments, and then at the bottom it has cost at closing and cash to close. So you want to understand what all of those expenses are. All right, now let's get into some of the closing details. Okay, this is where the go is. Alrighty, so the first line under your loan costs, so there are a few buckets here. You have your loan cost, your other costs, then calculating your cash to close, as well as summaries of transactions that have already occurred in the past from your sellers and also for you. It just reveals all the information of who the attorneys are, all the things, okay? So my loan cost, you have the percentage of loan amount or points. This is for any type of PMI or points. If you're like buying down the loan, you'll see all of that stuff here. So we did not have any points. We decided not to buy down the loan, and we can talk about the pros and cons of doing that in a later video. But we decided not to buy down the interest rate for the loan, so that is 0, and our underwriting fees are $950. This is really important to kind of understand what are the underwriting fees, and this is something that you can ask up front when you're negotiating between the two banks and deciding who you're going to choose. Now you have services borrowers did not shop for. These are typically things that the bank is going to do that you can't alter the cost, okay? So we had an appraisal fee that I've already talked about, $695, a credit report fee of $1925 that I've already discussed, but there are a few other fees here, which is a tax service fee and also a flood certification, which equate to $59. Now they have services that the borrower did shop for because we found our own independent real estate attorney. However, you might choose to use the bank's real estate attorney, and then you'll have those fees here. So there are other fees like your exam fee, which was $150, your lender's title insurance, which is $3,500. Then you also have a settlement fee of $950 and a municipal lien search fee. They just want to make sure that there are no liens on the property. That was $25. So the sum total of the loan cost, in addition to a survey fee of $125, was $6,573.25. All right, moving on. So there are some other costs, and these costs include some of the governmental fees that you have to pay, like recording fees and also prepaid things. So when you purchase a home, depending on when you close on the home, you may have to prepay your mortgage and also prepay your mortgage insurance if you have any mortgage insurance, your homeowner's insurance, and also property tax. So all of the prepaid amounts came to $10,763.14. Now you have the escrow payment at closing, and this is $1,100.63. Then you have some other fees. Your owner's title insurance. Now you don't have to get title insurance. This is optional. We got it and it was $1,800. And then real estate commission fees, which is $350. So a sum total of all of those was $14,634.77 of the other costs. If you're doing this math with a calculator, there was an adjustment of that fee for some things that have been prepaid. Just letting you know if you are on the other side of this doing the math. So our total closing costs, which closing costs typically are about 2 to 5% of the purchase price, our total closing costs were $21,208.02. And then we had to pay the rest of our down payment at the time of closing. And so our total cash to close was $41,481.55. As you can see, purchasing a home is not inexpensive. It is something that you want to plan for, and in addition to that down payment, there are other costs, other fees that you have to pay. So you want to make sure that you not only have a substantial amount saved in that emergency fund. If you are going to have a higher mortgage than what you're currently paying in your rent, then you want to incorporate that and save up 3 to 6 months even before pursuing your home purchase. You need your down payment, but in addition to the down payment, you need closing costs, right? Because there's so many other things that we often don't think about when we're saving for a home. And let me just tell you a couple of other things that you might need to account for. So these were our moving costs and some costs that occurred right upon us moving into the home. Now, when you purchase a home, you can either move and box everything yourself, or you can hire movers. In this case, because I knew that it was a substantial amount that we were putting down for the home, we decided to pack everything ourselves and hire the movers to move the big furniture, move the boxes, and they disassembled and assembled all of the furniture that was present in the home. For 3 movers, it took them about 6 hours, and they had to lift our couch onto the roof to bring it into our 3rd level. That cost us about $1,500, and that also included their tip. Now, I am frugal Franny, and so we got a couch donated to us, and in order for us to move that couch in, I purchased a U-Haul. Typically U-Hauls are about $20 a day, but I added on some additional boxes and tapes and things, so that was about $35, and we had to pay property tax. So the monthly fee of our property tax is $1,422.36 that we paid, in addition to some maintenance repairs. Unfortunately, about 3 weeks into moving into the home, our hot water heater no longer worked. So yes, that means we were boiling water for too long. In order to replace the hot water heater and some additional repairs and customization of the home, that amount was $10,556.40. You can see my computer here. And we also had to pay HOA fees. Our HOA fees are about $275 a month. So the total amount that we paid was $134,389.43, plus or minus a few dollars. Right, so you can see that purchasing a home is not a small financial commitment. And anytime you are making this home purchase, you want to make sure that you're going to be in the home for at least 5 years, if not more. Keeping the home up to date and maintaining the home takes time, it takes money, and it takes a little bit of effort. Of course, you have property taxes, homeowners insurance, and all of these things that are going to be recurring fees even after the home has been paid off. So I hope that this helps to give you a glimpse inside of our home and our numbers, and it helps you with making a decision on whether or not a home purchase is the best decision for you and how much you should have saved up in addition to that down payment, so that you can make this as financially stress-free as possible. And if you haven't already, subscribe to my channel. It will help me to know that this content is valuable to you, and really in this space, this is a safe space for us to be vulnerable and transparent about our numbers. And if you desire a home but you don't know if you can afford it because you still have debt and you want to position yourself to be the best candidate for that home purchase, then there's an opportunity to work with me. I work with women in healthcare all the time to increase their savings, to pay down debt, and to become more competent and confident in the management of their money. So click the link below and set up a free, absolutely free discovery call with me so we can get to know if I can help you achieve the goal of your first or second home purchase. Well, I want to say thank you for spending your time with me, and I'll see you in the next video. Bye-bye.